Well, on Wednesday this week, Finance Minister Enoch Godongwana will be tabling the 2025 national budget. There's suggestion that National Treasury has continued to struggle to reach its tax revenue targets for the 2024-2025 fiscal year. Already in the midterm budget of October last year, it had to downwardly revise its forecast for the same by around 22 billion rand. And it looks like its expectation might be undercut by the end of March this year. But can National Treasury really afford to tax South Africans any more than they do already? Well, to discuss this and other challenges facing SA Inc., I'm joined by Peter Attard Montalto. He's the MD at Krutham. Thank you very much for joining us, Peter. So there's talk that Finance Minister might decide to venture to raise one of the key taxes, never mind your sin taxes and fuel levies and so on. But what's your take on this possibility?
Well, this debate has suddenly emerged very quickly since the blackout period where Treasury has been in, where they don't talk to the market. It's come after that December revenue data came out that we've just heard. But it's still a very live discussion, it seems. There are people discussing this in the Sunday papers and in the media this morning. And it's all quite bizarre, I think, that 2 days before a budget, such a major policy change is seemingly not locked down. I think that speaks to some of the problems inside the government of national unity on some of these fiscal problems. And I think we need to bear in mind that neither party actually wants a VAT hike. And so I think if we do end up getting one, it shows that Treasury hasn't been able to extract cuts elsewhere and is not able to convince Cabinet of the ability to borrow more money. But I have to say we are a little more optimistic, certainly, than the PwC commentary that you've had there. We think that excluding the two-pot revenues are coming in only just a little bit below what they penciled in before. And I think people are also forgetting that there are huge reserves that Treasury's penciled in the budget for the next fiscal year of about 20 billion or so after SRD's already been taken account of. So there's a lot of wiggle room that the minister already has. And so we'll have to wait to see what comes out on Wednesday.
Yeah, well, it's good to hear an optimistic voice. What are your confidence levels around the structural reforms taking place around energy and logistics, and specifically around our key SOEs? And do you expect them to be a drag on the fiscus in the forthcoming announcement?
Well, I think people often overplay the budget as an opportunity to think about growth. There's actually very little the National Treasury or the fiscus can really do on this point. Remember, most of the reform things are happening elsewhere. They're happening in crisis committees like NECOM and NLCC for electricity and logistics, and in departments like the Department of Transport, which is obviously creating a PSP unit, a private participation unit, to support reform there. So all the stuff in the real locus, if you like, reform is actually outside of the budget process. But still, there is a mopping up of historic messes. We don't think that happens really in this budget. There does probably need to be at some point an ESCOM bailout extension, but they don't necessarily have to do it this Wednesday. They can do it in the M2PS at the end of the year. And the same for the Transnet bailouts as well. Transnet will have to have a bailout eventually. It's not obvious to us that there has to be given at this budget now. Transnet hasn't met the conditionalities yet. A lot of conditionality dates coming up around the guarantee that Transnet has that have to be met first, probably in the next couple of months before a bailout can be given. So I think these are timing issues, and a lot of this sort of wave of the final wave, I should say, of cleaning up historic messes around SOEs, but not necessarily having to arrive in 2 days' time.
Yeah, I think it's a fair point that you make, that perhaps we expect all too much in the one budget sitting. But we got some positive assessments around the economy's direction from the ratings agencies in November, just in terms of the tone of what they had to say about how the economy was doing, and also in the changing of outlooks and so on. But how do you think in the final analysis they're going to be viewing South Africa now in terms of its debt management?
Well, I mean, let's not forget there's a wall of redemptions coming. So a very large amount of bond outstanding is being redeemed in the coming 3 years. It's about 350 billion per year being redeemed. The big famous R18 6 bond is being redeemed in 3 tranches. This actually has a big impact given Treasury we expect on Wednesday to announce that they're keeping the amount they're issuing per week unchanged. This actually creates quite a drop in debt to GDP in the coming few years. And we think that will help support the rating agencies on this upward trajectory. But let's not kid ourselves. This is a very slow upward trajectory. The rating agencies remain very skeptical. I would argue too skeptical. I think they raise too many political risk problems. I think they're far too negative on social stability. But we are on a very slow upward pace. It may take 3 years or so, I think, to get back into investment grade. But we are on that path. The Moody's and Fitch may well come out shortly after the budget with some comments. We're waiting then for a big calendar date. S&P gives us an actual date in May when they'll give us an update. We think they can actually upgrade the rating at that point, and is a very important step along this path towards higher ratings. But clearly everything has to hang together, and we have to see the context within that of VAT hikes or anything else going on to keep rating agencies on that upward path.
Yeah, Peter, shifting away from budget, when it comes to the difficulties that have arisen between South Africa and the United States, do you think South Africa has formed the correct posture in dealing with the statements and actions that the Trump administration has taken against the country?
Well, I think the initial response in SONA was correct, that the country is going to stand up. But I think equally the country needs to, and the foreign policy stance needs to take account of the fact that there are limited things that South Africa can really negotiate with the Trump administration. There are some transactional foreign policy things that clearly can be done to, I think, keep them on side, such as around Starlink, around what's done on that sort of thing. But fundamentally, I think the US is not expecting South Africa necessarily to be massive flag wavers for Western imperialism or anything, right? I think the issue more is a properly non-aligned stance, and that's where there's deep skepticism, not just in the US, but I think in many Western capitals. And I think that's where we need to see much more clarity in terms of communications on things such as the ICJ court case, such as the relationship with Iran in particular. Even if there aren't issues, say, with Iran, I think those perceptions are built up and need to be very clearly dealt with. But also I think we need to realize that South Africa actually can weather a storm with the US maybe more than people assume. And maybe considering back at Lady R time, I think people exaggerate the impact, for instance, of falling out of AGOA. We think there will certainly be a wobble to GDP of falling out of AGOA, which is our baseline, but it's not a recession or a larger shock to come. We need to keep that, I think, in proportion.
All right. No, thank you very much for your perspectives there. That was Peter Attard Montalto. He's the Managing Director at Krutham.